Hello, everybody, and thank you for joining me today. It's Alan Barry Labakan with the Rocks and Stocks News Show, and I've got a special edition in the middle of or Tuesday. I just did my weekend show a couple days ago, but some very interesting things are happening that I wanted to talk about. I've got the gold chart up here, and I've been anybody that watches my show for any period of time knows how bullish I've been on gold for a long time. And a key reason for that is the what I call the death spiral of debt, and made worse by the cost of servicing the debt. The United States has almost 38 trillion in debt, over 38 trillion. And the for the last 12 months, the cost of servicing that was 1.25 trillion. This is quickly becoming the most costly thing in the what the government spends money on. Now, another reason that I've been very bullish for a long time is I talk about how the fiat currency and debt system is broken. And I believe we're at an inflection point now where those two roads are coming together. What I mean by that is that the uh, the fiat currency and debt system has really been two key players in that. One is Japan, and it's what's called the yen carry trade, and the other is the U.S. debt system. That because it is the it has the world reserve currency that helps it to be able to enjoy. I guess that's not the greatest word, but it is what has happened is that the U.S. has been able to take advantage of being able to borrow money like it's going out of style because they have the world reserve currency. And now we're seeing those two key pillars of the global fiat currency and debt system having serious problems. If you can't borrow money cheaply in Japan and then buy the U.S. debt and clip the difference because it was for so long such a significant difference between those two, this starts to affect the both the Japanese and the US, and the Japanese own a lot of US debt. Now, another factor that plays is playing a role in that whole uh, grand scheme of things is the we're hearing a lot about Greenland lately and the tariffs. President Trump seems to think that he can bully his way into controlling or buying Greenland. I can't even believe I'm saying that, but I am because that's what's going on. And those that don't fall into line, he wants to put another tariff on. Now, tariffs are a problem for the US economy and the global economy. And up until now, Trump has been able to basically do what is called taco. Trump always chickens out. So he throws out all of these tariffs and then he ends up backing off on them. And that's worked pretty good so far. But now we've got a different situation happening. He's doing this at a time when that the yen carry trade is breaking down. Okay. And so it's becoming clearer to not just central bankers of the world, but investors of the world that the fiat currency system and the debt system is broken. And that's why we're seeing gold doing so well. Earlier today, it was up about $150, and after hours, it's up another 0.5% or $24. And what I see happening is I think we're going to start to see this 50-day moving average steepen in a more bullish fashion. And that will take us right through 5,000 very quickly and beyond. Uh, in my Outlook 2026 report, I called for $6,000 an ounce gold. I anticipated that I would be making a adjustment to that probably in the late second quarter or third quarter, and we're only 20 days into the month of January, and I already think that it's going to go well over 6,000. And it gets back to those issues that I'm talking about, this inflection point that we're at, where it's becoming clearer to more people that the death spiral of debt, the cost of servicing the debt, the broken fiat currency and debt system, and all of these roads lead to gold. Okay. Then you've got another factor that's coming into play, which is quantitative easing. The United States and other countries are starting the process of going into quantitative easing. And once that genie gets out of the bottle, it's only going to continue. And one of the reasons that it has to continue in the United States is twofold. One is that President Trump wants the interest rates to go back towards the free money era. And I believe a key reason for that is because they see that they have so much debt and the cost of servicing that debt, instead of cutting spending, they think that the way to go is to cut the interest rates to bring down the cost of servicing the debt. And that may work for a very short period of time, but what will ultimately happen is that in order to get there, they're going to have to get back into the yield curve manipulation to bring the yields down in order to facilitate the next Fed chairman to do Trump's bidding. Okay. And so this will cause inflation to take over in a very significant way. And right now, you're seeing a problem that the Federal Reserve is in. They've got two mandates. One mandate is to keep the jobs market healthy. The other is to keep the prices stable. And they have no mechanism to look after both. They have to throw one or the other under the bus. They've already thrown inflation under the bus, and I think they're going to back the bus up forward and backwards over inflation as we go forward. And so what I see happening is they're doing this at a time when the jobs market is in serious problems. And that's why they have been cutting interest rates, is to try to stabilize the jobs market. But it's not working. Just like their efforts to slow inflation down to their target rate didn't work, they're failing on both sides of the mandate. They have to throw the interest rates under, or the inflation under the bus, and this is going to cause stagflation to really get out of the barn, if you will, in a big way. If you look at what is really happening in the economy, I think that the government statistics are under reporting on the inflation, and they're over reporting on the economy, and they also continuously overstate the jobs market and have to continuously revise the jobs numbers down dramatically. And so you've got all of these things combining all at once, which is extremely bullish for gold. Now, the stagflation and the supply and demand equation on silver is also extremely bullish. And it really started to take off back in the summertime when I talked about it back here when it was basing here, right here, and that I thought that it was getting ready to go through 35, then 40, and then over the all-time high of 50, and then set a series of record highs, which it is doing. And that has a lot to do with two things, I believe. One is the stagflationary problem that's happening, and secondly is the supply and demand equation. The demand has been much stronger due to solar panels and other technologies that need a lot of silver. And it has created a deficit in the supply and demand from mining over the last 4 or 5 years to the tune of about a quarter of the annual production of silver. Now, the reason it didn't blast off sooner is because the above ground silver was able to fill that deficit. Now I believe that after 4 to 5 years of those deficits, that the above ground silver can no longer fix that deficit. And so now we're getting real price discovery on silver, and we're seeing a series of record highs. Now, copper also has a very some good drivers for it as well. It also has a supply and demand problem. In the There is a deficit forming in 2026, and quite a significant. We won't know how significant, whether it's a 500,000 tons or 1 million tons or more than that, until the year goes on and we see how much demand is coming from artificial intelligence. And even though I see a lot of problems in the real economy, I also believe that the quantitative easing is going to help. Some of that easing and quantitative easing is going to go into artificial intelligence. And because that is one of the only bright spots in the real economy. And so that is very bullish for copper. And so that's why when I talked in my Outlook 2026, I talked a lot about how I see a perfect storm for gold, silver, and copper. Now, gold, as I said, I think it's ready to see this 50-day moving average bend upwards at a higher trajectory, and that will take it much higher due to what those confluences or inflection point that I talked about earlier with the death spiral of debt, the cost of servicing the debt, the broken fiat currency and debt system. With If Japan and the U.S. have catch a flu in the debt market, it's going to be a big problem. And so now we're starting to see all of these things converge, and the quantitative easing and the stagflation are adding fuel to the fire of the gold bull market. Now, I also said in my Outlook 2026 report that I saw that the gold, silver, and copper stocks are going to be the star of the show in 2026. And part of the reason that I say that, I'm not going to talk a lot about each of my individual picks, but I just want to kind of go over them quickly. And One of the things that is quite shocking to me are two things. One is that even though we've got gold at 47.91, we've got silver making record highs, we've got copper making record highs, the stocks in those metals, the companies that hold those metals in the ground or are mining those metals, are trading as though the price of those metals are half their current prices. So the metal stocks are very subdued compared to the gold, silver, and copper prices. All right. Now, another surprising thing to me is that with gold, silver, and copper at these prices, it has a way of making marginal projects very profitable projects even more profitable. And yet, I am struggling to find a lot of companies to pick. So ultimately, what I think is going to happen is that generalist investors worldwide are going to start to get more involved in gold, silver, and copper and in the stocks of the miners involved in those metals, from the explorers, developers, and the miners, from the majors to the mid tiers to the junior miners to the developers and to the explorers. And when that happens, they are going to find a very small menu. I am shocked that I can only, at this point in time, I've got several categories and I cannot find a lot of companies in those various categories. I'll give you my first example, which is my majors. At this point in time, I only have four majors that are picks of mine. One of those is Agnico Eagle, and this is just an example of how crazy the valuations are in the miners. Now, I originally started picking Agnico Eagle in the first quarter of 2024. Back then, they were trading at about $60 a share. Now they're trading at $289 a share. But here is the crux of my argument in a nutshell. If you look at the free cash flow they were generating when I first made them a pick, and the multiple of their valuation relative to their free cash flow, and where their free cash flow is now, they are trading at a lower multiple, almost half the multiple that they were when I first picked them. So even though the stock has gone from 200 or from $60 to $289, they're cheaper now on a free cash flow multiple than they were when I first picked them. Now, another interesting development for Agnico specifically is that while gold was doing this in the fourth quarter, where you see here the fourth quarter, it averaged about $4,200 an ounce, which is about $600 an ounce higher than any quarter than the previous quarter, which was the best quarter before the fourth quarter of 2025. Yet look at the stock. It was going sideways during that. It hasn't really anticipated in a significant way that they are going to blow out in their earnings and their free cash flow in the when they report, it's going to be a blockbuster. And yet they're only trading about 15% higher than the average price during the fourth quarter of 2025. And so this just goes to show you, one, it's an example of the valuation, but it's also an example of the lack of conviction, even when the reality is sitting right in front of people. The quarter, everybody can see and do the math and understand that gold had its best quarter ever in the fourth quarter of 2025. And yet there was no anticipation. So this tells you that the sentiment towards and conviction and understanding of value towards the biggest of the one of the best major gold miner, it's happening across the board. Now, Newmont is another example of a company that's been making significant strides in changing their fortune. Until I picked them back here in earlier in the year of 2025, before they went through this golden cross, they had been a chronic underachiever, if you will. And then they went through a golden cross and have done extremely well, now trading at $118.94 in a short period of time. On the fundamentals of the company, they sold off a bunch of their tier two mines, and that brought them in a bunch of cash. They also they also um, integrated Newcrest, the Newcrest buyout into Newmont. So now you've got Newmont plus Newcrest is the new Newmont. Okay. And so that is helping their bottom line quite dramatically. Their free cash flow is had a record in the third quarter of 2025, and it's going to see another record in the when it reports the fourth quarter of 2026. So I'm not going to go over all the charts. I'm just going to put the gold price back up here as I talk about my rest of my picks. On the majors, another is Pan American Silver. Now, I picked Pan American Silver because I wanted to have a company like when I picked Agnico Eagle, my thesis was that gold was about to start making a series of record highs, and that was going to be very bullish for the stock. And that has played out beautifully. Now, Pan American Silver is a similar pick for me, like Agnico Eagle was back in the first quarter of 2024. And I believe that as silver makes a series of record highs, that Pan American Silver will be one of those go-to stocks for generalist investors that want leveraged positions into silver through the major mining companies without a lot of downside risk. And the reason that they're not going to see a lot of downside risk in Pan American Silver is because the company is sitting on close to $1.5 billion of cash, and about a third of that is in debt. So they are really cash positive on the balance sheet, and they're an excellent miner. They just had news out today. I advise you to go take a look at that. But Pan American Silver is my silver version of Agnico Eagle in early 2024, and that's why I picked it in 2025. Now, another pick that I made is Coeur Mining. And Coeur Mining had been a chronic underachiever for a long time. Then they bought Las Chispas off of Silvercrest, and that helped them increase their silver production and also decrease their cost of production. And then they bought another company, and they're going to have the benefits of those two companies plus their previous operations. Their Rochester mine and other mines will be in full force. And so I think that that's very bullish for Coeur Mining. But there you go. When I make picks, I'm either trying to pick the best in breed in the majors, and that would be for gold, it would be Agnico Eagle. For silver, it would be Pan American Silver. And then Newmont and Coeur are kind of like turnaround picks for me. They were underachievers that I think they're going to be overachievers. So I'm always trying to find specific reasons for companies that will outperform the price of gold and silver and outperform their peers and outperform the index that they're measured against. And I think that I put together a very good list for investors to check out and consider. Now, I've also had a similar kind of philosophy about my mid-tier picks. One of my mid-tier picks is Alamos Gold, and I picked them around the same time as I picked Agnico Eagle, and they have done extremely well. When I first picked Alamos, they were trading at about $14 or $15. They're now trading over $50. They've significantly outperformed gold, and they're a very well-run mid-tier miner. They're one of the lowest cost miners of all their peers in the mid-tier to the major category. They produce gold for about $300 below the average cost of production amongst their peers. And they're also they're spending their free cash flow to increase their production and also bring down their costs to where they will be even probably $500 below the average cost of their peers as we move forward into when they get all of their development projects into full commercial production. And so that's the angle on Agnico Eagle, or sorry, Alamos Gold. Now, another company that has done extremely well for me is Aris Mining. I picked them because of the quality of their Segovia mine in Colombia and their other mines. Segovia is a low cost producer, high grade, high margin. They've been a real rock star. And I think with the pipeline that they have, um, and the effort, they're actually making efforts to increase their production at Segovia. Then they've got other development projects that will keep them producing a lot of gold at a low cost for many years into the future. Aris Mining is one that I think could grow into a large mid-tier or maybe even a major as we go forward into the future. So that's the angle on Aris. Equinox Gold is a producer, and I often talk about the Lassonde curve. Now, there's two peaks in the Lassonde curve. One is when an explorer makes a discovery and they go up the left side of the Lassonde curve. Then they go into the development window, and then when they bring it into production, they go up the right side of the Lassonde curve. So even though Equinox is a gold producer, because of the projects that they have in development and moving towards full commercial production, they're going to like 3 or 4x their annual production and be producing gold at very high margins because of their Greenstone mine in Ontario and their Valentine Lake mine in Newfoundland. And so that gives them let's say, some new gas in the tank to move up the right side of the Lassonde curve. And that's why I like Equinox. That's the angle for them. Orla Mining is a company that I picked before they brought their first mine, Camino Rojo, into production. So they were a developer that then transitioned to moving up the right side of the Lassonde curve. And so what they've done since then is Camino Rojo has been a very big success. Then they also bought a mine, Musselwhite, from when Newmont was selling off their tier two mines. They were a benefactor of that because they bought one of those mines called Musselwhite off of Newmont. Now, inside of Newmont, it's not big enough to move the needle for them, but it is big enough to move the needle for a mid tier. And when a project is a tier two project inside of a major, is that they don't get the love that they need. What I mean by love is that they don't optimize the production. They don't really worry about doing exploration to increase the production. They're busy on their tier one mines, so these tier two mines they get underloved. And Orla's Musselwhite efforts shows this underloved situation in that it really hadn't been, it's been in production for over 2 decades. And but it didn't really have a lot of exploration being done on it. And so Orla went in there and they did some step outs like 2 kilometers from their uh, from the mining area and found what looks exactly like what's in the mining area. So it looks like this can be producing for another couple decades. And now they have made the decision to also move ahead with the development of their mine in Nevada. So collectively, this they've got the assets to help them grow into a larger mid-tier or maybe even a small major in the future. And who knows, with that kind of success, they can also go out and bolt on other assets and help their production grow from there. So that's the angle on Orla mining. Okay, so in the majors, I have four picks. In the mid tiers, I only have four picks. In the junior gold miners, I only have three picks. One of those is Heliostar Metals. Heliostar Metals is a new producer in 2025 that bought its way into production. And the plan there is that they were able to get the mines for a very good price, I would even consider a cheap price. And by doing that, it gives them the cash flow to then build their cornerstone asset, which is their Anapala development project. And this will enable them to get up to a 200,000 plus producer over the next few years. And based on their valuation relative to where they're going, they are a very good opportunity. And so I think Heliostar it has the potential to grow from a junior gold miner into mid tier. And that transition means a very big difference in the valuation of the company. And the fact that they have cash flow that will then enable them to cover the cost of bringing their cornerstone project into production with probably needing only maybe to put out a little bit of debt to get there and maybe even not. You start looking at four, five, or 5,000, $6,000 an ounce gold, and that's going to bring a lot of cash into their treasury. And their Anapala mine doesn't have a huge capex on it. And so that's the angle on Heliostar. Now, Luca Mining is a new producer that has a portfolio of assets that have growth potential with the drill rig, or as I like to refer to it as the truth machine, to increase their production. And they've got the known as deposits that can help them grow their production. Plus, they can do that with the drill rig. And as they get a stronger balance sheet, they can also look at taking over projects that are not big enough for the majors or the mid tiers, but could be a company maker for a junior gold miner or gold and silver miner in the case of Luca Mining. And they've also got some base metals in the mix as well. So that's the angle on Luca Mining. Now, Sierra Mining has been a very successful pick for me. They are also a junior producer. And I believe that, well, they just had finished another deal. Their first mine they bought from First Majestic. And it wasn't big enough to move the needle for First Majestic, but they were able to bring that mine into production and have success with it. And now they just recently announced a second acquisition from First Majestic called Del Toro. And Del Toro, they think, can have a similar path to success as they had with the first mine that they bought off First Majestic. And I heard their First Majestic did an interview in the last couple of weeks that really impressed me when it comes to Sierra Madre. The interviewer asked their CEO, why did you do a second deal with Sierra Madre? And what he said was that the Del Toro mine was never going to go back into production under First Majestic. It was too small to move the needle for First Majestic. And so they thought by doing a deal with Sierra Madre that's already proven themselves to First Majestic, they could get an even bigger shareholding in, I think they own close to 40% of Sierra Madre now. And he had confidence, Keith Newmeyer, that the Sierra Madre team would be able to have that success with Del Toro. So they were able to take a project that was just on care and maintenance for First Majestic and get value out of it through holding shares in Sierra Madre for selling it to Sierra Madre. And so that's the angle on Sierra Madre. Now, don't worry about whether or not you're going to be able, if you didn't have your pen out, don't worry because in the description of this video, I'll have a list of all my picks so you can find that out without any problem. Now, the next category that I have is what I call my unicorns. Okay. Now, what I mean by a unicorn is that I kind of borrowed that from calling companies that from the tech industry. And in the tech industry, when a company has huge success, they are they call them a unicorn. And the picks that I've made that I call my unicorns, I think that they have those projects that could move them to huge success with what they have at their projects, these special situations. And so my unicorns are Vizsla Silver. They're a sponsor of my reports. I started following them at about $1.50 a share. They're now trading at over $9 a share. And why they've done so well is the quality of their Panuco project in Mexico. If you look at the economics that the studies that they've done, you really cannot, I can't, and I doubt you could find a company with a better economics. And what I mean by that, when I look at a project that's in development, I look at the cost of bringing it into production. In the Panuco case, it's 225 million. I then, and by the way, Vizsla has double that in cash in their treasury. Then I look at the internal rate of return. And in their case, if you use the current price of gold and the current price of silver, which they'll be producing, it will have over 100, close to 150% internal rate of return. That is off the charts, folks. And therefore, the other factor that I look at is how quickly can they pay back the capex? Because once they pay back the capex, then they don't have to worry about building. Now they're just producing and making money. And in their case, because of the low capex and the high IRR, the payback, you're talking about a few months using current prices. And think about that, folks. That's almost pretty close to $1 billion of free cash flow in the first year of full commercial production. So this is why I call Vizsla a unicorn. And I'm very proud to have them as a sponsor because I think that they're going to grow into a much larger company as they bring Panuco into production. And I think it has the ability to help them become the next major silver miner. Now, my other or my other another of my unicorns is McEwen Inc. And McEwen Inc. is a very interesting story because it has a unicorn project for copper in Argentina. It is one of the top 10 undeveloped copper projects in the world. They did a feasibility study, and their all-in costs are about $2.11. So based on the current price of copper and where I think it's going, they're going to be looking at three and a half, $4 using current prices per pound of copper profit when they get it into production. And so the world needs more projects like this in copper. There is all in 2026, the deficits between supply and demand start and they continue for many years. And that's when over the next few years is when McEwen Inc. is going to bring their Los Azules mine into production. But they also got a kicker, and the kicker is that they got a junior gold mining company is to that could grow into a significant size junior gold miner. And with the copper project, it actually turns them into a de facto mid-tier that could grow into a much larger company. And so that is the why they're a unicorn in my opinion, and I think they got a lot of blue sky ahead of them. Now, Goliath Resources just had results out from their drilling in the final drilling results from the 2025 program. And why they're my unicorn for a gold explorer with an important high grade discovery. It's in their Sherbet project is in the Golden Triangle of British Columbia. It has a vast distribution of visible gold in their drilling, and it has a series of stacked veins that are analogous to the Pogo mine, which was one of North America's most best mines in the past in Alaska, but this one has the same geological characteristics as Pogo with these stacked veins and they still have a lot more drilling to expand those. There's two sets of veins. One goes to the west, and one series of stacked veins goes to the east. And there is a sort of a hinge where these two come together. And that has the potential of being a starter area where you could go in there with underground bulk mining and make a lot of money. And so that's what makes them a unicorn as a gold explorer with an important high grade gold discovery. Now, another of my sponsors is Amex Exploration, and they remind me a lot of Vizsla Silver. If I rolled back the clock about a year and a half ago to when I first started talking about Vizsla Silver, they have a project, a high grade project in Quebec that has a very low cost of production, under 100 million. It's got very high grade. They've got almost 1 million ounces with an average grade of 16.2 grams per ton of gold. That's really off the charts these days in the gold development projects. And it's in the Abitibi region, and they can benefit from using mills in the area and they're studying that economically right now to get an economic assessment at toll milling from their Champagne zone, this super high grade 16.2 gram per ton grade deposit, and use a few years of toll milling to then, or some call it direct shipping or whatever you call it. I call it toll milling. And you use the benefits from that to then build a mill on the Perron project. So instead of sort of going in there, let's say, and costing 300 million to bring it into production or 400 million, they can do it in a staged way towards bringing that into full commercial production. And it is a unicorn project due to the high grades, being in Quebec, being in the Abitibi, being where they can have the benefit of toll milling. They also have a town literally right beside their project. It's only about 5 kilometers from the town of Normetal, which was built for the Normetal mine. So it's a mining friendly community that a lot of the people that work there, they go to mines that they have to travel to. This they could take a bus or a taxi to get to there, and then they can go and watch their kids play hockey and sleep in their own beds at night, which means that they won't need to build a camp to bring Perron into production, and that helps keep the cost down. So that's why they're a unicorn, in my opinion. All right. Now, another category that I talk a lot about are my top of mind picks. And what I mean by top of mind picks is these companies are, for the most part, very small with great projects, and they're doing a lot of work on those projects that can be the catalysts to helping them grow into bigger companies. One of those is Pirate Gold. Pirate Gold's in Newfoundland. They've recently gone through a management change. They brought in super talented people that really know what they're doing, led by Denny Laviolette. And Denny is a super talented geologist, and he's got a partner in crime, if you will, a fellow pirate, if you will, in Greg Matheson. And they've got their Treasure Island project, and they're looking for buried treasures with the Truth Machine. That's all happening right now. And so I'm very optimistic about the future of Pirate Gold. Another one, and that's in gold. Now, earlier I was saying how the menu is very small, and I've got 32 picks, I think is the total right now. And so someone would say, well, that's a lot of picks. Well, actually, if you break it down by category and the various metals that they're in, maybe I've got 10 to 12 gold picks, 5, 7 silver picks, and that ranges from producers to mid tiers to juniors to developers and to explorers. So in each category, I don't have a lot of picks. And that gets back to the point that I made earlier, which is that as generalist investors start to come into the gold stocks, the silver stocks, and the copper stocks, they're going to have a small menu to pick from. And when they start getting into them, the valuations are subdued to the point that they're only based on long-term metrics of how to value them at the various different stages. They're trading at about half of what, as if the price of gold, silver, and copper were half their current prices. And so I think there's going to be a lot of people coming into the entrance is going to be small, and therefore these good companies in these various categories have the potential for explosive growth. Just to catch up to the valuation metrics that make sense based on the current price of gold, silver, and copper. Now, if they go up like I think they have even more catching up to do. And so that's why I'm excited about those. Okay, Sterling Metals. Sterling Metals is a base metal explorer. They've got a very high grade copper discovery in Ontario that's in its very earliest days. They're in their first pass, they had success, and that success they had in their first pass of drilling, I think is going to put them into the position to have a lot of success as they move forward with their next rounds of drilling. And I'm not the only one who thinks that, because they were able to attract a very talented geologist who has is now their chief geologist. He comes from an impeccable background, or some say a pedigree, and he's could be retired. He doesn't need to work, but he wants to roll up his sleeves at Sterling Metals discovery in Ontario. I don't blame him. You don't come across these kind of discoveries very often, and that's why I think you should look at Sterling Metals. Now, another of my top of mind picks is Kirkland Lake Discoveries, and they're kind of they've had they're also first pass drilling their project near Kirkland Lake, Ontario. This is what you call elephant country. There's a lot of big mines in the Kirkland Lake area. They've got a very large land package in Kirkland Lake. They've started their first wave of drilling on a very high quality discovery. They're learning as they go with each drill hole, and they I think that they are going to have a lot of success on their base metal, and also it's highly prospective for gold as well. So this gives you a bit of a combination of exploration for base gold, copper, and gold. And they're well funded. They're doing a lot of drilling. They're in the midst of the starting of a 25,000-meter drill program. And Kirkland Lake Discoveries is another you want to take a look at. Now, Borealis Mining is currently a top of mind pick, and I'll probably keep them there, even though they are emerging to become a junior gold miner in Nevada. They're at the earliest stage of turning back on a past producing mine called the Borealis mine. Now, when it was in production, it had economic problems because of the price of gold at the time and the mismanagement of the mine. And so Borealis has come in there. They're going to turn that mine back on. And they've got a very strong management team, a great board of directors. They got funding from people like Eric Sprott and Rob McEwen. Rob McEwen is their largest individual shareholder. He owns about 15% of the company. Both Eric Sprott and Rob McEwen are legends in the mining business. In the case of Rob McEwen, he is a mine builder as well as an investor in mining stocks, and he owns a big chunk of Borealis Mining. And I think that you're going to see Borealis Mining become a significant junior gold miner in 2026, and their timing couldn't be better. You're looking at $4,800 an ounce gold on the futures market as of tonight. And as I talked about earlier, I think we're in a perfect storm to see it go much higher. So take a look at Borealis Mining. I'm a shareholder in Borealis, Kirkland Lake Discoveries, Sterling Metals, and Pirate Gold. Foran Mining, I always like to have picks that are transitioning from development into production and then have the chance to go up the right side of the Lassonde curve. Now, I picked this company in 2025 when they were trading at about $2.50, 25 to 50 cents. Currently, they're trading at over $6, and they're bringing their McIlvenna Bay mine into production in 2026. They're scheduled to start producing some copper, pouring some copper in February, so right around the corner. And the quality of that project suggests to me that they're going to have a nice ride up the right side of the Lassonde curve. Over the years, I've done very well picking companies as they transition from exploration, development, and then into production. And this is one of my top picks for that kind of a company, Foran Mining. Newfound Gold, also a very exciting story. they're moving towards bringing their Queensway project into production. Now, what makes this phenomenal? And in fact, I think that this one is a candidate to move up into what I call my unicorns. And why I say that is Newfound Gold is planning to do open pit mining of deposits that have grades that you would make nothing but money in an underground operation. Usually in an open pit, you have very low grade and you're moving lots of rock to make money. In this case, they've got very high grade factors of multiples of what is in most open pit gold mines. And they get to mine that with an open pit situation. That is, uh, I, I'm going to have to move them up into the unicorn category. I think they got a very bright future ahead of them. So do your homework on Newfound Gold. 9 Mile Meadows is a little junior, only has about a $25 million Canadian valuation. They have drilled 3 holes into a brand new geophysical anomaly that had never been drilled, and it's in close proximity to a past mine called the Wedge Mine. Now, a great place to look for a mine is near a mine, and that's the story that they're developing. But this could be, I think, a spectacular scenario. Why I say that is they've got 3 holes with 20 meters and plus of almost solid massive sulfides. And it has the sulfides, copper sulfides, that are known to be high grade copper. And it's not over like a meter. It's over 20 meters, 24 meters, and 60 meters of massive sulfides in 3 separate holes on a brand new geophysical target. If those assays come back the way I think that they will, and I'm basing that on my experience after looking at a lot of drill core over the last 32 years, I can't, and people have said, well, Alan has looked at a lot of drill core and held a lot of drill core, and that's absolutely true. I can't remember very often seeing 20-meter plus intervals of solid massive sulfides like what I see at this brand new discovery that they're drilling into. The assay results are right around the corner. I think we're going to start to see them maybe within the next week or two. And I think that they are the catalyst that could give this company a 100 to 200 million dollar valuation very rapidly if those assay results come back like I think that they will. So stay tuned for those. Do your homework on 9 Mile Meadows. I think it is a very good roll of the dice. All right, Norsemont Mining has a 2.7 million ounce resource in Chile on a project that has an ADR plan, has permits, is ready to go back into production, needs more drilling. They're doing that drilling now. I think that they've got the potential to have a lot of, how am I going to say this? Market moving opportunities with their stock based on the drill results and the path to getting this project back into production. And so take a look at Norsemont Mining. BlackRock Silver, I originally started picking this company at under 50 cents. I think they're almost $2 a share now. And what makes this company special is that they already have a resource of over 100 million ounces of silver with a very high average grade. It's got one of the highest average grades of a developed silver development project anywhere in the world. And it's in Nevada. And it's right beside a town. So this would be a very low cost to bring it into production, low cost to mine it, high grade, which would make it a free cash flow machine. And it's still open to get larger. BlackRock Silver is one. If you want torque to the price of silver. BlackRock Silver is one you want to take a close look at. West Red Lake Gold is one of these companies that I think is ready to go up the right side of the Lassonde curve, and I'm picking them at the bottom of the right side of the Lassonde curve. They just announced commercial production as of this month, January. They've been moving it towards commercial production over the last quarter of 2025. Now they've got it into full commercial production. Now, the reason that I think West Red Lake Gold is has a lot of torque and a lot of potential to move up the right side of the Lassonde curve is because it's being how do I say? It's being looked at because, in a way, that okay, it was a past producer that bankrupted a company. But you then look at why did it bankrupt the company? They didn't do the right work, and the price of gold at the time was nowhere near where it is now. I think they bought this when gold, that project, when gold was trading at around $2,000 an ounce. Well, if gold was $4,800 an ounce, even with the past mistakes that the previous operator made, they never would have got their hands on it. But then they came in, they did all the work that's needed. People don't believe in it yet because has this past, but I think its future is very, very bright. Not long ago, I did an interview with their VP of Investor Relations, Gwen Preston. You can find that interview on my YouTube channel. Another top of mind pick that is I did an interview with recently is Nouveau Minerals. Now, Nouveau Minerals is a spectacular story that is an undiscovered gem that I think has the catalyst to be a much more popular gem in the not too distant future. They have a 1,300 square kilometer project in the Abitibi that was formerly in production by Glencore, that was not, it was a tier two mine for Glencore that they didn't do the love it deserved. Then they did a deal with Nouveau. Nouveau has come in there. They're going to do a bunch more drilling. There's a mill on the property. It's all permitted. The only permit they need is to permit a new tailings facility on the project. It's in the Nematigami mine is well known in Quebec. There is a town right there. There's a bunch of miners right there. They want this project back into production. I don't think they're going to have too much problems getting that tailings permit because they've already got everything else they need to bring it into production. And they've got the deposits that are still have life in them to bring those into production. Plus, they've had exploration success for the base metal VMS deposits on their project. But in addition, the Abitibi is one of the greatest gold mining camps in the world. And this huge project has never been explored for gold. They are the first company to go in there and make a serious attempt at exploring it for gold, and they've already started to have some early success. They're not getting a lot of love in the market on this project. I think it's a real undiscovered gem, and I hope you do your homework on Nouveau Minerals. My special situation pick is Earth Labs. Now, why I like Earth Labs a lot is because they have two growth engines. One is they've got a digital marketing platforms, including the Northern Miner, which was the Bible of mining in Canada for over 100 years. Plus, they have other websites like CEO.ca, which is kind of like the Twitter of people interested in mining companies. And so that's one asset that I think is a sort of the bread and butter of the company to look after the operations and the people. But the real engine is they own a fund that has investments into junior explorers and developers. Now, it took them a couple years to build up their portfolio, and in the middle of 2025, it started to really mature, okay? Because investors started to get more optimistic about explorers and developers. And in their third quarter of 2025, they had a 2,300% gain on their portfolio compared to the same quarter the year before. In the year before, they earned about $1 million on their portfolio, and in the third quarter of 2025, it was 23 million. And if you look at all of their various assets, I think that the company is very undervalued, and I I think it's a perfect vehicle for the generalist investor that wants exposure to exploration and development, but doesn't have the skills to find good investment in that category. They kind of take a shotgun and they don't really know what they're doing. These guys know what they're doing. And so a generalist investor can come in there and get that torque of exploration and development success without doing a lot of homework because the folks at Earth Labs do it for them. So take a look at Earth Labs. Okay, then I've got a category that I call my gold and silver explorers with important high grade discoveries. I made Dolly Varden a pick, and then like a month later, they got a takeover offer from Contango, and they're going to. It's almost a merger of equals with Contango. Contango has the production, so they got the cash flow, and then Dolly Varden Silver has the high grade silver and gold in the Golden Triangle that they can use to grow the company from there. I have to make a decision by the time Dolly Varden is taken over by Contango if I want to pick Contango. I'm pretty sure I'm going to, and this is a good way for investors in Dolly Varden Silver to be part of the new Contango of the future. And so that's the Dolly Varden story. Now, another of my Southern Cross Gold has an important high-grade gold discovery in Australia that I think I call it the Fosterville 2.0 story. Fosterville is one of the great high-grade orogenic gold mines in the world, and they're about 30 kilometers, and they found a similar discovery. Now, I'm not saying it's going to be as important as Fosterville, but for a company the size of Southern Cross, so gold, it doesn't need to be. But I think it's going to be a very big success that uh, grows this company into a much larger company or even a takeover candidate. And so that's why I like Southern Cross. My developers, I'm going to quickly just mention their names. Arizona Metals for copper in Arizona, Generation Mining for copper, palladium, platinum, and gold in Ontario that has gone through feasibility and is moving towards production. Generation Mining. Meridian Mining has a very high grade open pit pro project in Brazil that for copper and gold that can be open pit at a very handsome grade. I think they've got a lot of growth in front of them. North Isle Copper and Gold, they're in the northern part of Vancouver Island. That area is known for mines. They are getting supported by the local First Nations community and the government of British Columbia to bring it into production because we need more copper, especially copper mines in Canada and especially in British Columbia. So that makes North Isle Copper and Gold a very exciting story. Now, my explorers, I can only, this show has gone longer than I anticipated, but as you can tell, I'm a little excited about what's going on in the gold space and the silver and the copper. So I'll just quickly name them. One is Argenta Silver, that's high grade silver in Argentina. Aztec Minerals is high grade gold in Arizona. Golden Cross Resources is high grade gold, orogenic gold, just to the immediate north of Southern Cross Gold that I mentioned earlier, and not very far from Fosterville. They're early in their exploration, but I like their chances. IDEX Metals is copper in Idaho. They are also early in the exploration of their project, but I like its chances for copper. Inventus Minerals Mining, sorry, is in Ontario with a conglomerate gold story that's very exciting, but is not getting a lot of attention now. And I think it will in the future. Inventus Mining is doing bulk samplings that they're actually making money off the bulk sampling. So that's an interesting story. Kootenai Silver has a great silver discovery story in Mexico, and they're getting a lot of attention. Mithril Silver and Gold not getting a lot of attention in Mexico with very good project. I like their future. I can say the same about Pacifica Silver, also in Mexico, also looking for high grade silver and gold in epithermal vein environments like Kootenai Silver and like Mithril Silver and Gold. And I like their potential. Power Metallic Mines is looking for base metals in Quebec they've hit very high grade. The stock went up when they made the initial discovery, softened up, and is going up again. And that happened because of the cycle of drilling. When you're drilling and you're coming out with a lot of news, it can move the stock up, especially with the grades that they have. But then when you're not drilling, it softens up. Now they're drilling again, and I think it's got the chance of onwards and upwards. Kimbaya Gold, they've almost broken the thesis of why I like them, but not quite. So I'm not ready to move them into the radar screen, but they're kind of on the verge of the radar screen because they won't be drilling for a couple more months. So just stay tuned on Kimbaya. It's probably worth looking at if you can get it at a really low valuation because they do have a lot of money and they can go at it in a big way. And they are right beside the Segovia mine of my mid-tier pick, Aris Mining. And but they're very early in the exploration. They have had some success. It's not the kind that's market moving success, but it is in the right it's moving in the right direction, and that's why it hasn't broken my thesis yet, but it hasn't really proved my thesis yet. And therefore, I'm not moving them down into the radar screen, but I am looking at for them to get cheaper, and buy them, and in anticipation of their next drilling. Wolfden Resources has a really good epithermal vein system in Nevada in the Rocker Lane trend that I like a lot. And I like the team that's involved with Wolfden Resources, really talented geologists. So take a look at Wolfden. And Chali Gold, that's spelled Xali Gold, has a very interesting new acquisition in Peru that they got from Pan American Silver. And it's one of these stories where the project was getting no love as part of Pan American Silver. But then Joey Fries, who runs Charlie Gold, has had huge success in the past in Peru because she was the qualified person geologist for Arequipa. That was a 30 cent to $30 success story that was bought out at around $30 by Barrick for their Purina discovery. And then it was a great mine for Barrick. And so Joanne Fries knows Peru, and she's got a project in Peru now that I think is a company maker for Charlie Gold. Okay, wow. I got through all of my picks. I didn't talk about a lot of them as much as I would like to. I'll try to do more of that as we go forward and keep looking for more picks. But again, as I started this story, as I started this show, I think gold, silver, and copper are going a lot higher, which will bring in generalist investors. But those generalist investors are not going to have a big menu to choose from. And the valuations of those companies are very modest relative to the price of gold, silver, and copper. And so I think there's a big run coming for the gold, silver, and copper stocks that will be even more impressive than my bullish outlook for gold, silver, and copper. But as always, I am not making buying or selling recommendations. I am merely a idea generator. I use my 32 years of experience in the mining sector and having been mentored by great geologists, geophysicists, and geochemists to filter and try to find the wheat instead of the chaff. But that's for you to do your homework on and speak with your financial advisors. And I doubly emphasize the do your homework because I think that the informed investor has the potential to be the most successful investor. I've seen it over and over in my career in mining and outside of mining. I think you want to be an informed investor. And if that's the best advice I can give you, I'm happy with that. And I'll keep giving it because I believe so much in it. So do that homework. Have a great day, and we'll talk to you soon.